Welcome to Weekly Open. I'm Brian. We got Don and Cred on the line. We're just going to get straight to it. We're going to have a pretty condensed show today, but we are here and we're happy to be with you. Not quite at our normal time because daylight savings and Americans and Europeans, it's complicated, but we're here on a day of panic. Are we still panicking? I'm actually not sure. Don, how you doing?
Good. Fuck. No. I've leaked my IP, I think. That's not nice. Give me a sec. I'll fix this.
You're all good. Cred, how are you?
I'm all right, honestly. Happy for the market, less happy with how I traded it, despite everything kind of working out in terms of predictions and timeframes and all that type of stuff. But yeah, fine. Could be better, not terrible. There you go.
Good. You're middling.
Yeah, that's what it feels like, honestly. I mean, I sort of described the process on Twitter somewhat, where I have a higher time frame trading strategy, which is more swing oriented, and then a lower time frame one, which is more intraday oriented.
Yeah.
And the upside of that is if I pick the right strategy, it's amazing for those conditions. So I can trade high time frame levels, even if I don't get the high time frame swing correctly, I'll still make some money on the rotations, and vice versa as well. I can essentially ignore low time frame resistance levels and support levels if I have a higher time frame swing thesis. That's the idea anyway. But obviously, if I fuck it up, then it's basically the reverse of that, where I hold high time frame trades into targets that don't happen, or basically trade against the higher time frame rotations if I'm intraday oriented, and it's the second one that happened on this occasion. So definitely underperformed this leg up, but it is what it is, as all the famous philosophers say, and the market is going to have no shortage of opportunities given how everything's transpiring. So,
well, one of the last things I saw last night before I turned the internet off was your tweet saying that your FUD brain is telling you there's a decent chance we backfill a chunk of these weekly wicks. And in the midst of it turns out this might be bullish for crypto euphoria, that was a real downer before bed.
Well, there you go. Now you're welcome for the bottom signal.
Yeah, here again this morning, and we had euphoria, panic, euphoria again. What's next, Don?
I'm sure he's fixing his stuff.
No, he must be fixing his stuff.
I mean, we have CPI. So in terms of what's on the horizon, I think a couple of things. One is we've once again reached three things, really. One is in purely technical terms, we've now reached an extremity once again. We're at the top of the range. You sort of blink and you'll have missed it, but there we are. Second, we have CPI tomorrow. And the market in terms of pricing, I think at the moment, in terms of FOMC, jumping ahead a little bit, the market was pricing like 0% of a 25 basis point hike, which I think is a bit crazy. And I think CPI data is going to swing that one way or another tomorrow, and we'll get some volatility as well. And then the third thing is we actually have like a real narrative now. And I use the term real very carefully because I don't count the AI coin or China coin or any of that type of stuff as being particularly useful or compelling. But if you're a macro portfolio manager and you're watching all these local banks blow up and the S&P dump / chop, and then Bitcoin is up 10%, that starts to seem like a bit more of a real value proposition and something to look back on, as opposed to it's just levered beta risk asset type of stuff. Obviously, it's a sample size of one, and it's one day, but it was definitely a good day to show up and print some green candles.
Yeah.
I mean, Thank you. I mean, it's a really, really good narrative to run, I think. And given the candles that we had the last 2 days, I think that's going to attract some eyes to this market. And that's a good thing, right? Especially given how much attention the banking thing has gotten. Like, a lot of people are just afraid of their banks now. I don't necessarily think we're going to get a banking crisis anytime soon. But I mean, people are afraid, and people are looking for something. And if Bitcoin goes up 20%,
is this not a banking crisis?
I mean, it is a banking crisis, but I don't think it's gonna necessarily topple all banks. I've seen a bunch of people be like, "Hey, this is gonna on Monday, everything is gonna melt down." That seemed very unrealistic to me. It's one of the reasons why I bought a bunch of USDC at like 0.9 ish. Because I was like, I don't think so. I think they're going to get bailed out / this is going to resolve over the weekend. But it's obviously still a crisis. Like, this is some bullshit happening again.
Yeah, I think that's actually a good way to put it. I think what amazed me is that I really thought like, okay, a bank run is hard, not impossible, but hard. And what we realized pretty quickly is there's a lot of banks stuck with this duration risk, which is literally the like legacy banking version of the BlockFi duration risk or whoever else, all the crypto banks that failed. And honestly, it wasn't that hard to trigger. Like it was pretty straightforward of create a situation where a high percentage of deposits are not under the FDIC umbrella, meaning they have more than $250,000 deposited, and then have a panic where the bank is having to sell bonds at a enormous loss because they locked them in at low interest rates in order to manage people's concerns who are trying to leave the bank, and then boom, all like very quickly you have the run, and it just wasn't that hard to orchestrate. Like it just happened, and it's like how in the world did this happen so easily, happen so quickly, and affect such a breadth of banks? But so basically, if you're not one of the big four, like or not big four, but big major banks, the JPMs of the world, that's kind of too big to fail, and you're sitting on these unrealized losses of your long-term bonds and low interest rate stuff, then you're in trouble. And that turns out it's like a lot of banks were in trouble, and it pretty much gave the only option for the Fed and Treasury, all these stakeholders, to say, okay, well, you'll be fine, everybody. And don't worry, the taxpayer is definitely not paying this burden, but you'll all be fine. Everybody's good. Don't worry about the banking system. Everything is fine. We got it taken care of. And then that kind of breadth of security from officials, and they're coming out here U.S. time like 8 a.m. Eastern time, like first thing in the morning. Not to mention all the weekend wrangling. They were worried. They were panicking. Like there was potential for this, if they just slow played it, to get really, really, really bad this morning, as people are like desperately trying to flee all these banks. 3 large banks got taken over. All three of which are startup and crypto friendly, which is a whole different kind of quasi conspiracy thing going on right now. So now what you're seeing today is people are basically fading rates and fading the dollar, and essentially saying the Fed is stuck to where they have to do something. They have to essentially bail out banks that on their own would have been in big trouble. And so like there's a bluff calling scenario happening here. Do y'all disagree?
No, that sounds right. I'm just not sure how constructive that is for the bringing down inflation mandate in general. Right. It seems like you can't have your cake and eat it, and having your cake and eat it would mean, well, look, you have 2 objectives, right? One is to bring down inflation, and the other is this conscious understanding that doing so too quickly will adversely affect financial conditions. And now we're seeing the financial conditions be affected, and core infrastructure, banks, etc., or basically stuff breaking. But if you ease off on your rate hikes without bringing inflation down to desirable levels, then you've sort of kicked the can down the road, for lack of a better term, which is tricky. So ideally, you'd want to see like a really good CPI tomorrow and PPI a day or two later, to suggest that you can afford to pause or ease, or to basically take your foot off the gas when it comes to the anti-inflation tools. But it is definitely sort of has the risk of turning into a rock and a hard place type of situation, where you basically have to choose between inflation and stuff breaking, and that's just not a very good position to be in.
So we see this, bluff calling in the market. My friend Rob, I think his Twitter handle is Goof, smart guy. He has this thesis that essentially this is actually giving the Fed a ability to keep raising rates, because at the same time they're like, yes, we raised rates until we broke something, but now we've given a free pass for all those deposits to still be protected, right? So like the low rate bonds that are all completely wrecked, they're going to be protected, and that allows us to continue raising rates to try to curb inflation. And that would be the type of surprise to the downside, because the market this morning priced in no rate hike whatsoever. So like if you still see aggressive rate hiking trying to tackle inflation, the banks end up okay from all that. Like they've kind of been given this protective hand, but all the commercial entities, your lending markets, real estate, your corporate lending, all that stuff is still going to be wrecked because rates can still go up. And I don't know that the market would be prepared for that. So yeah, if there's that kind of backhanded capacity to keep doing what you were doing because you've given this protection to banks who have this duration mismatch, that could be an interesting scenario on the bearish side.
Yeah, I agree. I mean, but in general, like, does it really matter for crypto right now? Because I think the narrative is pretty clear for at least Bitcoin, and that is just fuck the banks, basically. And I mean, it's a good narrative to have, right? And I think we can pump off of that alone, especially given, like I said, the kind of velocity that we've had. And I mean, just looking at the TA on this thing, it's actually insane. On the monthly time frame, we hit support, bounced strong off of it after having had like a barely red candle at resistance. I don't think this resistance is too strong anymore. I mean, we're gonna have to wait and see, but I mean, I'm positive that this could break.
What's funny is this is exactly where we talked about in terms of like that. Like this box is not a new one by Don. It was a new one last time, if y'all recall. But we all talked about like if it goes here, it needs to pop off super quick, and that's exactly what happened. Like it popped off hard.
Yeah, that is exactly what you want to see.
Yeah.
And if you go through the time frames, right, on the weekly time frame, we almost hit like deep support, and then just completely reversed, almost close to weekly green. Obviously, I have had this massive green candle to the upside today into a resistance that we've tested 3 times before, right? And last week on this show, I was kind of fudding everything being at resistance. Well, we're back at resistance, but the fact is that this resistance is shitty now, in my opinion, given we've tested it so many times and given the velocity that we're testing it with. So I think, I mean, we're still right at resistance. That's why we've been getting rejected today. But I don't think that's going to last. I think we're going to smash through it.
I listened to a Boomer podcast where they say there's no such thing as a triple bottom or a triple top, and Don's essentially affirming the same thing. It's too weak. It's been slamming it too hard too many times, so this time maybe it won't hold.
Yeah, I think that's a good way to put it. Like, it's rare. I mean, sometimes it happens, but it's rare, and I wouldn't count on it. And then you just look at the daily time frame, right? And we had this range that I was a little bit worried last week when we were trading here. I was like, this daily resistance is not that nice. I mean, we're just like bashing our head against like a brick wall. Well, we broke down and had this massive engulfing to the upside, reclaimed this entire range here, and are now trading above it. And I don't think like we made a lower low, yes, but this kind of seems like a shakeout now. Fucked over people by quite a bit. Everyone really, like stablecoin holders got their fair share. Bulls and bears got wrecked in this. And yeah, I think we're ready to move higher. I'm excited. I think 32K is a good target. And I'm holding. Is what I'm doing.
Cred, how will you trade this from here?
Probably click small for a little bit. Try to get back into sync because clearly I had a duration mismatch just when it came to my trading timeframes. So that needs some fixing. Usually the remedy for that is a higher frequency of trades on lower timeframes ish, just to kind of see what's up. Bigger picture, I think I'll try to get a chunk of the CPI volatility tomorrow. If that causes dips into nearby structure, I don't expect them to be super, super deep, like the Don's Weekly, etc. That'll be a bit, I think, of an overshoot. So that's probably the next plan that I have is in the interim, just click small, try to get back in sync because clearly I wasn't. In terms of catalyst calendar stuff, try to position for CPI. Nothing immediately because it's a bit of a tricky area, like right at the extremity at the moment, and no kind of clear invalidation or anything like that. But Don just boxed out the structure there that I think is the first nearest daily support at the very least. So yeah, that's my sort of vague hand wavy plan. Just get back into sync, and if it breaks out, Godspeed, moon it. If we get some fuckery, I think lower time frame volatility is here to stick around. But that's about the best I can do. I'm not going to have very strong views if I've been off sync. So just kind of trying to get some mojo back.
My whole body wants this thing to just turbo off this level, break through the 200 week and do the 25 to 30K move like really quickly, like 2-3 day type thing. You could look at a lot of things, clearing moving averages, clearing the same horizontal level for like the fourth time, a head and shoulders, like literally every potential pattern trader, chart trade, whatever, like whatever your system is, you can point to reasons why this has capacity to go from 25 to 30K. Ichimoku trader, whoever it is, whatever your pathway. That said, I guess there is a potential case for the market just to tell us all to slow down, right? Like to your point, Cred, about it might take some time to backfill and get some of these people to say like, oh crap, this is March 2020 all over again. Yay, new party, new parade, and smashes us down a bit. That said, my gut says like the same thing as Don. Just hold it and go for it. let it roll. I think my thing is I'm not particularly bearish at this point. Like I do think that Fed backstop probably just got placed, and it's going to take like a 50-point hike, something like that, to get me really questioning all of that. I think everything looks pretty good though. Like I'm very cautiously optimistic that we actually have room here, like real room to get to those levels we've talked about for a while. 30K Bitcoin, $2,500 ETH. The Dixie is also setting up really well for something similar, just perfectly rejected off of its kind of fast moving averages, 200-day, 20-week, that kind of thing.
Yeah, I mean, I really like ETH as well. Like, this just looks good, right? It held 1.5K, the all-time high, the Binance all-time high in 2018. You can see like how that was defended, and quite strongly so. And now it just looks basically like an up move with a little bit of sideways that is ready to just push for the next one. And the next one, I think, could take us all the way to 2.5K, as you said. I don't want to be too bullish, given we just had like two of the best days in a while. But yeah, I don't really see a reason to be bearish yet. Especially given, I mean, to give it some context, I bought low on Bitcoin, held it all the way up, and then basically held it all the way back down. So I was like, I'm not going to sell the same resistance that I could have sold the first time, because the picture is a little bit different now. I think it's much, much stronger now, with all of these wicks, with all of this new narrative. We were running out of steam the first time we hit 25K, and the first time we hit 1,700 on ETH. I think we could have that steam now. So I'm a little bit more optimistic now than I was the last time we were at these price levels.
One of the things that makes me interested as well is just most of the alt BTC pairs are getting beaten up today. Mm-hmm. So like they're floating up, 1 or 2%, while Bitcoin's up 10%. Even ETH is up 5%, but down 3.5% on ETH BTC. After making a really nice move. I mean, I messaged y'all yesterday, which we never message except for Mondays. And I was like, guys, is this the one for ETH BTC? And that was probably your sign to nuke it all. Like just go full BTC at that moment, because this stupid coin, like that pair, just loves to stay in the range.
Yeah. It's still in the same range, doing the same thing. But I was actually excited for ETH BTC as well. I bought a bunch of ETH. I traded it around, honestly, just based on the fact that I kind of had this thing where I wanted to have as much USDC as I could, but I also wanted to have a bunch of ETH because I was thinking that there was going to be a move. So I kind of was like, every time USDC went close to 0.98, and I mean, the chart's just hilarious. Like, what the fuck is that? Every time it went like up quite a bit, I sold and I was like, oh, I want to buy ETH now. And then when it went down, I was like, oh, I want to have USDC because this looks like a brain dead trade basically. So I traded around, didn't end up with as much ETH as I wanted from the lows, but it's okay. So like I was kind of struggling with the ETH positioning, but I was super into it as well, and it's nuked. So if it's on someone, it's on both of us really, because I was like excited, and I bought a bunch of ETH too, and it's reversed last week's action, which is a little bit sad.
Yeah, I guess we can finish on, and I apologize to everybody. We got to be a little short today. I'm gonna go watch my kid do some music at his elementary school. So, the USDC trade and DPEG and repeg. The DPEG was because there was a lot of ambiguity about Circle's cash, which they had about 25% of their dollars in banks. And then which one was the first one? I freaking forgot. Silicon Valley Bank.
Yep.
Our Signature first, but Circle had money with Silicon Valley Bank, but we didn't know how much. It turned out it was about 8% of their total deposit. So it's about 3.3 billion, something like that. And that caused the DPEG to immediately stretch all the way to 8%, which was weird because it's kind of assuming you lose all of it. So people were actually pricing in like more of their banking partners essentially were going to go under. That pretty quickly recovered, especially as they came out and kind of talked about the details, and more information came out on the legacy side of things as well, because this is a much bigger than crypto problem. There's like 1,000 Y Combinator companies or something like that potentially got money locked up. Every chat I'm in with startups and funds and whatever was like panicking about banking and banking partners this weekend. But yeah, so it came back up to 99.9. Do y'all expect this to have another test of the DPEG, or do you think it's over?
I think it's okay. Like it's gonna go to 1. I'd be surprised if it doesn't. The only reason why I sold my USDC position was because I was like, if I sell it at 0.98 and I just buy Bitcoin, I'm gonna make much more than the 2% that I could gain on this. Because I was like, if you recover all of this, what you will do is kind of squeeze the base just on this pair alone, and you're gonna get like a bunch of kind of FOMO going on other pairs. Because I don't know if you guys watched how this was trading on futures and like on derivatives exchanges, but it's fucking nuts.
It was wild, apparently. Yeah, I think Bybit was like the only market, and then BitMEX added it. Binance added
Kraken had it too. Kraken was trading it. Bybit had open interest of like 260 million.
Wow.
And that was after this move was done. Like when I closed my trade at 0.985-ish, like there, it was still like 250 million open interest.
This
like
is one where
completely wrecked.
I had really high conviction. I was not even trying to trade it, didn't have access to trade it, but I had high conviction that this was going to get back to 98 or better. And it's one of the only ones where I saw really people I really respect, both from a trade and just markets perspective, completely disagreeing on the timeline about like, you're an idiot, you essentially risked everything to gain a 5 or 6% trade, and then other people are like, this is the freest possible money ever, and it's like basically a no risk. And I was like, I don't know, I land on the side of this was free money, because to me the highest possible risk was an 8% DPEG, and that seemed extremely aggressive, and I felt like it should be more like 1.5 or 2. So when it was at 90, I was like, dadgum, this looks great. But yeah, some people really disagreed with that, and I found that fascinating. Cred, did you have any thoughts about the USDC stuff?
It's just mental to think someone out there got liquidated on USDC at 19.6 BTC before it went back up to 26, like a couple of days later. There's like a real person who experienced that, which is pretty crazy. Yeah. I think the only thing I think is that there's starting to be more and more evidence that stablecoin depegging events are just kind of bottomy events, and there's a sort of larger amount of panic, more so than reason, which is understandable in the context. Well, yes, unnecessarily. An algorithmic stables are different, obviously. But like in general, I can understand the decision making for people wanting to take a shallow haircut to make sure that their funds are okay. But if you're in a good position to be able to trade it, I think especially with USDC and even USDT, which is very much battle tried, these signals, especially when they line up with contextual levels, I think are becoming increasingly good. And we sort of get one once every year or so, 6 months to a year. And I think that's valuable in the future. But hopefully we don't have any more of those. That was enough for me, I think.
Cool. I've got 1 minute and I got to bail. I'm sorry. The rest of the week, up, down, or flat? BTC.
I'm saying up.
No idea. I'm out of sync, incompetent.
All right. I'm going up.
Great.
Up only. Let's go. Thanks for being here. Thanks, guys, for being flexible, coming on a little later. Daylight savings and Americans. It's just what we do. Sorry. But we wanted to be here for y'all this crazy Monday. Hope this was enough for you. If it wasn't, click like and we'll come back next time. Catch you later.